The producer price index year over year, this is what we were looking for. We are expecting 2.3. Let's see if we get 2.3, if we get 2.2, if we get 2.4. This is very important to the markets, guys. We got 2 minutes to go. Very important that you don't see PPI ruin the fun today. And what I mean by that is you don't want to see inflation suddenly much higher on the producer price index, because that would take away some of the positivity that a cool CPI print yesterday gave us. So what I'm going to do really quick is, let me just pull this up. Dre, thank you again for the $2. Really appreciate that, man. Gold was a monster. We'll cover gold in more detail soon. I want to just switch over to our all markets here so we can just watch this. We've got about 1 minute to go. 845 people here watching. Do me a quick favor. If you are enjoying the show, hit the thumbs up button. It's good luck. It's good karma. Hit the thumbs up button on the stream as we get closer here to the producer price index. So what you're looking at here on the screen, guys, is you've got the S&P 500. These are hourly charts, by the way. The NASDAQ, the Dow Jones, the dollar index is right here. Euro, pound, gold, oil. Okay, so you've got everything on the screen here. Most of the major indices, charts, things like that. So we'll be watching this here. 30 seconds to go before the producer price index comes out. And again, either confirms the progress in inflation or puts a little thorn in it. So we'll see. But don't go anywhere after the spike. Most people leave, so don't go anywhere. We got breaking news coming in just a moment. All right, 10 seconds to go here. All right, euro is lower. US 30, S&P lower. Gold lower here. Pound, euro lower. Dollar slightly higher. That would suggest that it's probably coming in as expected. Let's see if I'm... Oh, no. Core is higher. Producer price index month over month is higher. Oh, sorry. Let's go look at our year over year. Year over year came in at 2.6. Okay. So now you have maybe a little bit of a... I'm going to say this right off the bat. There is a, in my opinion, possibility that today you see a bit of a reversal on the theory from yesterday, right? Buy everything except tech. Maybe we don't see that be the case today. That being said, we've got gold slightly lower. Euro jumped lower and then came back. The dollar index slightly higher here. No massive moves, but certainly not the ideal inflation print here this morning. Yeah, what's PPI came in a little hotter than expected today. What are your thoughts on it?
PPI, I'm not happy about the strength it came with, because we have revision higher from last time, and then this time was higher than expected, and it kind of like collides CPI and PPI, and I want them to both be bearish, but hey, it is what it is, I guess.
Yeah, and it does take a little bit away from yesterday's consumer price index report, which was really good. You see a lot of markets reacting to this. You've got the metals. I mean, silver's down 3% on the day, completely erasing the gains from yesterday. Gold coming down here off this. The NASDAQ doesn't seem too phased by it. The S&P 500, Russell is just continuing to scream higher, and the dollar index, it seems a little unfazed too. Maybe consumer price index just takes the importance role for the day. You were looking at the yen. Do you have any thoughts on the yen today?
We had a discussion yesterday. Was that intervention? This discussion again today was the intervention when around, I think it's around 1 a.m. my time. So what is that? Your time, like 6 p.m. or something. Is that also intervention?
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
I don't know. Wait. Okay, no, that was this morning. Oh yeah, I see it. Wow. I didn't even notice that until just now. That's a huge, what is that? I'm doing it here. 160 pips. Ivan, how do you even trade this thing? How can you, that's the hard part for me with the yen is like, what? You just trade and you're like, oh, I'll trade the Asian session. Boom, 160 pips lower, and comes right back in 10 minutes.
This is where the experts are divided between the amateurs and experts. Now, I haven't traded it. I haven't added a trade yet because it's not bullish yet. It has come down. It has dropped.
Sure.
I've seen people in the group say, "Hey, I'm buying it. It's 100 pip stop loss," and then bam.
Yeah. And even with a 100 pip stop loss, that could really turn into 175 pip stop loss in a split second. Like the slippage can be massive.
So the only safe stop loss is 1,000 pips, or no stop loss at all. You just hope that it goes higher after all. So, but yeah, that's what I'm looking at. Not necessarily for trade, but to warn about the risk that you don't see on the chart that is about that can happen in the future. That your stop loss, if it's 1050, 100, 150, is at risk that can be taken out. Can you afford to trade that? And I have said clearly, no, it is not worth it at the moment. Chill, relax, have a good day, go to the beach, come back on Monday. Because what I said earlier today, what I've said this morning is that if you are buying now, Bank of Japan or interventions tends to happen in about 2 hours on a normal Friday, or it can happen close or open on Sunday, Monday. Mm-hmm. So there's still a lot of risk out there.
Yeah, and it's a good point, because I would say, Ivan, that I still lean more on the bearish side of the yen. But as you've pointed out, even in this yen movement, right, which has been seemingly, if you look at a weekly chart and you say, look, okay, how can you mess this up on the long side? You still can, if you are, as you've pointed out accurately here, with these big swings, you can get slipped like crazy. You can still mess up this bullish trend if you are too short term and you are too heavy leverage. I mean, you could really seriously mess up. And don't even get me started if you have a real kind of suspended, convincing sell-off in the yen, or in the dollar yen, you could get yourself into some trouble. So I kind of agree. I feel like if I'm trading the yen, I'm sticking to the higher time frames, smaller positioning, and gonna keep an eye on that economic data. But I think I showed you this. I think I showed someone else yesterday. I was talking to James about this GDP growth chart on the yen, and it's like this makes it very hard for me to be very bullish on the yen. When you look at their GDP growth has been consistently pretty disappointing. As we've talked about over and over, they have a population issue, they have a growth issue. Their bond buyback thing has been a mess. It's been unconvincing. I mean, I like the UJ. I like all the pairs against the yen to the upside, but as you pointed out, you can still mess it up if you're being too risky, right?
So my clear message is, at least for myself, stay out or whatever is happening now, let it be, but always remember that when things is dropping, that's when you're going to look for the bullish reversal or bullish direction and so the bullish trend. But this doesn't scream bullish to me because it's dropping. So let it drop, let it do its thing, and then whenever that time is, whenever your system allows you or whatever your statistics are, That's when you can start considering. Because I've already seen people started buying. People love buying the counter trend.
Yep.
They have been hurt today, I would argue. And then, yeah. So just don't make it so difficult for yourself.
Today, I want to talk to the dollar for a second too.
Okay.
Dollar's been kind of making a bigger move lower.
Mm-hmm.
What gets us to break 104? What has to happen for 104? Or does nothing else need to happen, that we're just going to, price action is just going to work its way down there? What do you think? For the dollar to push lower, what do we need to happen?
A beach.
A beach?
Yeah. Because this is basically the shoreline, and then we just need to drop it. No.
We need to go to the beach. That's the solution. I love it.
It's vacation time. No, seriously. I would argue if PPI today lower would have been the catalyst that I was looking for yesterday. And is CPI enough to do it? Maybe over time then. So not short term, but maybe next week or the other week. Going into like end of July as a slow burner. So my answer would have been a weaker CPI, a weaker PPI, but we didn't get it. So right now it's just pure determination and brute force if you're going to go through 104.
Yeah, and I would agree. I think price action could just do it. You could just see, okay, we're going to see the rate cut still this year, and that could still kind of push the dollar lower. But I tend to agree. I was looking for that producer price index to kind of confirm the CPI rather than take away from it. I think it took away a little bit from it here today. But I made the point right after the producer price index dropped. I thought through it myself, and I said, this is why when we talk about the Edge Finder scoring system, the whole theory here is it's about the combined data, not one singular point. And so I think that you have enough evidence here. The Fed chair, I know that they say the team there at the Fed doesn't know anything about the CPI before it gets released, but Powell was so dovish this week ahead of the CPI. He was saying we see equal risk now to inflation and to the labor data / economy. And perfectly times that. He says that within a day or so of the consumer price index having its best move lower in months and months and months. We had a negative month over month CPI. I don't know. There's no point in speculating that because it doesn't make a difference for what we do as traders. But it does make me think, Fed, Jerome Powell seemingly really wants to cut interest rates. We got the CPI that we wanted to see. I think the story here for the dollar still looks very weak. And from a technical perspective, there's this one big lower high that we kind of formed here. It almost touched that 106.4 level and just completely evaporated all those gains. So I don't know. I think we could just see a breakout just because we've got momentum here. But that's a really big ask for the sellers because this level of support has been in play for some time.
I am very settled on S&P at the moment because we have hit target, you probably have hit target before this as well. And when that happens, we either slow down or we go sideways. So I don't see any. It shouldn't continue higher from now on S&P. So now I'm hoping for 54, but I don't know what's going to make it go down to 5,400. Maybe, I don't know, a bombshell somewhere. But, yeah.
No, I agree with that sentiment. So, that's where I was saying earlier, it's like this move in indices, I don't know what the catalyst is to reverse course. The only thing I could speculate but not predict would be like weak earnings. We had, actually, I didn't even check this. We had, JP Morgan earnings this morning. We had, which no real reaction here, but back and forth reaction on JP Morgan. So we had banking earnings here this morning. I'll have to look into that to see what like consumer savings are looking like. That's a really important indicator out of bank earnings. So, yeah, I didn't think about that. But the S&P 500, yeah, to your point, I don't see the catalyst to bring it down right now. when it happens, I will probably be a buyer unless there's something substantially changed in the bull case.
Yeah, I'm just trying to see if there was anything in particular.
I think you had Citigroup also. Did Citi move? Yes, Citi did move. Citi's up 2% pre-market, which is it's not a ton, but it's a good move for a bank stock. Citigroup. Did we have Wells Fargo? Let's see, Wells Fargo. Yes, Wells Fargo's down 6% pre-market. That's worth mentioning. So some bank earnings here this morning, kicking off earnings season. That might be the catalyst. I mean, what would be a bigger catalyst for a push lower in the stock market? Could potentially be earnings. Like if earnings disappoint on the big tech level, that could be a little bit of a concern. But I'm not predicting that because they have a track record of beating earnings, so it's like really hard to try and predict that too. So I think that's why the stock market's up so much. Inflation's coming down. You've got growth that is slowing but not crashing. It's a bullish market, and I'm trading it until it's over. And when it's over, you got to get out of the way. You just gotta trade what's in front of you.
Yeah, so I actually I got involved on the future side. I was watching you and the last guest talk about UJ. I got in on the future side of UJ.
Oh, nice.
It's just Japanese yen futures to the upside. I was actually down in this area before we got this nice little push up. So this was a really good trade for me this morning. My reasoning behind that was simple. It was a follow through of the CPI pricing in effect from yesterday, combined with the yen intervention moves and how that's affected the value of the yen. But yeah, basically, I saw the markets shrug off, as you said, the PPI print relatively quickly, and kind of figured going into this, I was like, even if PPI comes out hot, I don't see the market caring more about it than they cared about the CPI print.
Sure. Yeah, and that definitely was the right thought process today. Producer price index did move some things around, but quickly snapped back a lot of the gains and losses. And, the dollar yen here is definitely like the chart of the day. You've got this thing just moving so violently here. Look at that in the last 15 minutes. My goodness, a crazy sell-off. And even overnight during the Asian session, we saw a similar shoot lower and then reversal back. Yesterday's ginormous move right around the CPI print. I mean, it is a volatile currency, to say the least. And, I guess do you have a bigger term thesis on the yen? Are you more on the bullish case for the yen overall, or are you more bearish? What are your thoughts?
So at the beginning of the year, this is similar to the dollar, where at the beginning of the year, I was more bullish on the yen and bearish on the dollar. So I was sort of sitting around waiting for UJ downside. And then we got a hike, the historic leaving negative rates situation out of the yen. And we just saw the yen continue to dump. And I was like, man, so that experience kind of shook my underlying belief in the yen strength, combined with the fact that since then there have been multiple confirmed and unconfirmed cases of yen intervention that still couldn't keep yen strong. So I don't know if my bigger picture idea is yen strength. I'm not confident enough to say that I believe in the fundamentals of the yen yet for a lot of strength. What I do think is going to push something like UJ to the downside, or JPY futures to the upside. I'm looking at British pound. JPY futures to the upside is continued significant weakness out of the dollar.
Yeah, sure. That makes good sense.
That's where I'm thinking we're going to be getting moves like UJ downside, Japanese yen futures upside is going to, not that the intervention efforts from the Bank of Japan or from Japan aren't going to affect the yen strength. It's just they've tried it a bunch of times and it hasn't held yet. So I don't know. I don't have a whole lot of faith in the yen.
Yeah, and actually to your point there, actually I wanted to point out that on the Edge Finder, which is our software, you actually pretty much pointed out the theory here on UJ here. Let me just, if we could switch over to my screen, Chandler or James, really quick. Let me just show you this. So UJ is actually getting a bearish reading on the Edge Finder. And as you pointed out, a lot of that is not necessarily about the yen as much as it is just the dollar, showing a lot of different economic prints that are more on the bearish side. So, if we go really quick, I'm just going to show this on the, let's go category, we'll go major currency pairs. And if we take a look at UJ, you have, GDP, MPMI, which is manufacturing, services PMI, retail sales. A lot of these factors are slightly leaning in favor of the yen, not necessarily because they're rock star for the yen, but because data in the US has come out a lot less than forecasts recently. So you're getting this reading on UJ. And for me, I'm still very hesitant with trying to get short UJ, simply because I think that if I'm bearish dollar, there are other plays that I'd prefer to make than trying to play the yen. I like the gold kind of thing that I've been trading for some time, and even maybe like the Australian dollar against the US dollar. But it is interesting to watch to see what that yen does. I mean, it is so violent, and trying to find the bottom on this has been probably trickier than many people had anticipated.
Yeah, absolutely. I think like you were mentioning the Australian dollar, that's a great opportunity, especially with the divergence happening between the two central banks right now. Something that's interesting with regards to CPI is I shared this blog post yesterday, and this is a public blog post. I just went over sort of a question, I guess you could say, about CPI. Is this enough? Is that, like, we're starting to see the markets price in over 90% probabilities of a rate cut in September. Is this enough for the Fed? Because they've been saying, Jerome Powell keeps saying, the Fed wants to have more confidence that inflation is sustainably moving lower. But he has yet to quantify what that means. How many prints? How much consistent lowering CPI? How much consistent lowering inflation do we need to see in order for the Fed to be confident?
Sure.
Right. So this is a interesting chart here. The core monthly CPI has been stuck in this range since September of 2023. However, over the last 4 prints, we've seen this consistent move to the downside.
Yes, exactly.
And then the exact same thing, very similar thing on CPI year over year. Been stuck in this range since July of 2023. We're still in that range, but the last 4 prints have been consistently lower. So I'm wondering, is this enough for Jay Powell to go ahead and say we're good to go?
Yeah, and I think my opinion on it would be most likely yes, because the other thing too is that the trend to the downside that's picked up in inflation is one side of it, but then you also have the trend higher in unemployment rate. And they, in the meeting that he had this week, or the press conference that he had this week, or not press conference, the Capitol Hill meeting they had this week, he pointed out that he kind of saw an equal concern on both sides of the mandate with both the inflation story as well as now in equal tandem the economy, the state of the economy, the labor data, etc. So it will be interesting to see. But as you mentioned, inflation showing some real progress this week overall. The labor data and PMIs and stuff in the economy readings have been coming in light, and that has been picked up on the Edge Finder very much so in terms of the scoring. It's been a lot of dollar bearishness based on weaker U.S. prints compared to forecasts. That's how it pretty much looks at all the different forecasts relative to what actually comes out. It's showing patterns of beats and misses, and that's how it's kind of finding its bias. So yeah, should be really interesting to see where we go from here with it. But I do think rate cuts are likely on the table in September. We'll see if something changes between now and then.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.